All right, financials, some of the mistakes that we look at. Number one, right, banks will lend about 10% of the annual gross sales. Merchant cash advancements will lend up to 20% of your gross sales. If you guys were here last week and the story with Marco, where he was actually, they over leveraged him and they gave him a lot more money, right? He made about, I think it was close to about $1 million. They gave about $250,000 in in um in MCAs. And unfortunately, even though you have the credits and you're over leveraged, a big bank will not consolidate an MCA first to give you that money. So let's just say you paid off that MCA and he's going to be cash flowing 20, 30, $40,000 a month more versus paying his MCAs. Even though he has everything, the credit, everything, you would need to consolidate that first before moving forward. It's kind of a shitty rule, but that's the way it is. So you have to fix it. So here are some ways, some creative ways that we developed on how to fix that, to be able to get as many credit, business credit cards. You can tap into personal loans, having enough money to consolidate that. Tapping into credit partners and leveraging them with their credits or personal loans, right? A little mixture of all this, or ghost debt to raise enough capital to pay off those over leveraged loans. So it gets a little creative, a little more advanced. But again, I wanted to throw this out there because if you're in this position, don't think that you're stuck, right? There are solutions to every single challenge that we've ever dealt with, right? And we know how to solve them. For example, one of my clients that I was working with, Robert and Ann. So you can see this is a very common situation where if you get one MCA, you need to acquire a second one to pay for the first one, or a third one to pay for the second one. You're just training these MCAs. Well, this person making about $100,000 to $150,000 a year in his limo business called me up and he was like, "Listen, I think I'm about to go to bankruptcy, and I don't know what to do. I have all these MCAs. I'm over leveraged and I can't get out of this mess, right? Paying $13,000 a month, give or take, is a huge deal when you're not making enough money, when you're spending more than what you're bringing in." And so when I looked at his credit, he had a charge off, high inquiries, high utilization. We used the credit partner hack. His wife still had to optimize, remove the inquiries. Utilization was decent. We had to get rid of the authorized user that had the high utilization. So we first went with her, added her to the company, got her some personal loans and some business credit cards. All right. Another big factor that I identify a lot of times is your debt to income ratio. So essentially, if you look at your monthly income divided by your monthly expenses, that comes out as a ratio. Used very highly much in your mortgage and personal loans for qualifications. So in this example, $10,000 monthly income, $3,500 monthly expenses, your 35% DTI. You want to be in that range, the 35 to 40%. Say, having a high debt to income ratio is like carrying a backpack full of rocks. It's just going to slow you down. We have to make sure we unload as many rocks as possible. And so there's a few different options that you have if you're in this category. Number one, you have to somehow either increase your income or decrease your expenses. Is there anything that you can offload so that you can make sure that you're in that range where your credit score is going to be in good standings? You're going to be able to qualify for anything that you want. And a lot of times it's very common in the mortgage industry where you have to add a co-borrower to the mix to qualify together, and a joint ratio where you're looking at your expenses and income and their expenses and income, they merge it together and hopefully that fits. So again, just two ways: increase income, decrease expenses, right? Very, very common there. So it's a very common thing there. Next is your banking relationships and activity, right? Having low bank scores, low deposits, and non-sufficient funds. This is going to be a deal killer, right? A lot of times, banks may ask you, "Hey, we have a no doc, financials, but we just want you to bank with us for about 2 or 3 months," right? What they're doing is they're looking at your activity and saying, "Okay, is this person who's stated they're making $250,000 or $500,000 or $1 million a year, does the relationship that they're having with us really coincide with what they're stating?" And so that could be one big element that can work there. Now, one thing that you can do is if you're starting out, you want to increase your banking activity, I would start with some alternative debt, either some business credit cards, even a personal loan, especially in the startups, where you take that initial startup capital, you generate, right, you reinvest that back into the business. And now that capital that you had to inject in your business, generating some monthly income, that increases business revenue. We're now able to take that business revenue and now for, and qualify for some business lines and term loans and equipment loans and things of that nature. Right? Does that make sense? Right. So looking at, the startup capital, or even if you are established, but you're look at alternative debts. Because the question is, if I had 100,000, what would I do to put that money to work so that that money could be 150,000 or 200,000? How could I double my money? Right. A little bit of business concepts, from all that. So don't be afraid to be able to take some alternative debts, right? As long as it's good debt. Forget MCAs. Everything but MCAs, please go for it. All right, banking submissions here, guys. All right, one of the biggest mistakes that we find is, number one, not creating your story. And by crafting this story, it's kind of like if you go on stage without a script, right? It's going to lead to a poor performance. If you're not practicing and understanding, number one, you want to. So here's some things that you can do to craft your story for yourselves. If you're going to go ahead and apply with the bank, manifest credit card, relationship manager, business line, equipment loans, whatever the case. Number one, thank the banker and an underwriter. Right when you're crafting this letter, describe your business, how long you've been in business for, something that you've accomplished. The highlights, right? The strength of who you are, and I mean, gloat about your accomplishments that you can provide here. Optional, you can choose why you're choosing this debt versus an existing one. When I went and applied for my 100,000 business credit card with Chase, one of the stories that I have, hey, I have a capital on tap, and a Bank of America, and it's around a 25 to 30% interest rate. Right, I'm about to start this marketing campaign, and I don't want to put money on those cards. Hence why I'm a 7-figure business. I want to be able to have a high limit, right? Just to justify the reason for the account over here. Okay, use of funds. How would you use that money? Right? How would that increase your revenue by 2 or 3x? Right? Give me that 50,000. I'm going to turn that 50 to 150 in a year, or 500,000, etc. These are all certain things that I want you guys to look at. You should never talk to a bank and say, I need money because I can't make payroll. I'm in trouble. Please help me. Like, no, it's always I am growing exponentially and I need this money to help support my clients, the accounts receivables. These are all certain things that can help you with that.